Hey guys, what's up? Alec back with the daily stock market, and look at that. We're up 7% in the last month, 24% in the last 3 months, so we're still on absolute fire. In this video, what we're going to be talking about is Amazon, Facebook, and Apple. We're going to kind of compare them against each other, do a deep dive into each of these stocks. I know you guys like when I do the deep dive videos, so leave a thumbs up on this video right away if you want more deep dive videos, and comment below which stocks you want me to do a deep dive in. I typically like to compare them to one or two other competitors like Facebook, Apple, and Amazon, big tech companies. So let's see what's going on. We'll dive in. We haven't done an update on some of those big tech companies in a while. So Facebook started off a little bit in the news because remember, they won the antitrust lawsuit, and then not even a week later, we have a new article coming out saying Facebook under fire as U.S. lawmakers press for a new antitrust complaint. And I posted, oh my God, it'll never end, because remember, they just beat that last antitrust complaint. And I said, hopefully it will drop them in the short term, so it gives me a good buying opportunity at a lower price. So we'll talk about price points of all these stocks where I'm looking to buy. Also, Amazon also in the news right now, so I figured it was a good time to talk about them and do a deeper dive. Jeff Bezos made Amazon a behemoth, but his legacy is complicated. And here you see on July 5th, Jeff Bezos will officially step down as CEO of Amazon company he founded in 1994. Wow, that was the year I was born, by the way, 27 years ago. Amazon will continue to exist, of course. It's one of the most highly valued public traded companies in the world with a market cap of 1.7 trillion, and it's probably even a little bit higher than that, honestly. But Bezos' decision to leave the post nevertheless marks the new era for e-commerce giant. So it is pretty much marking a new era of Amazon. The richest person on earth, Bezos, started the e-commerce revolution, forcing rivals like Walmart to jump into the arena or left behind in the dust. I also went on to say, hopefully this will bring Amazon down in the short term so I can buy a larger amount at a low price. So if you don't follow me, by the way, on Instagram, here's my Instagram. Make sure you do subscribe to me there, because I post a lot of awesome stories every single day. And if you're on my close friends list, I post a lot of interesting stuff too. Like I post cryptocurrency, bought $100 of ADA tonight, posted that 13 hours ago during a dip. And I also post a lot of questions and answers. So here you actually can see, Hetty actually asked me what I think about Dogecoin. And here's actually my thoughts on Dogecoin. We're not going to get into that because that's not what the video is about. I just wanted to go over. If you want access to my trades and see exactly what I'm buying, what I'm selling, how much I'm buying, when I'm buying the stock, and all that good stuff, I have a close friends list. You can also see all these green highlights here. Those are all for close friends list only. We have watch list, we have options, we have crypto, and we even have a third close friends list because we filled some up in the past. Now back to the video, you actually see that we also have Apple in the news right now, has changed its policy to allow marijuana delivery services to operate in its app store. And 83% of you guys did agree with this move. Okay, so let's talk about Apple, Amazon, and Facebook a little bit. So Apple's up to 139.79. It's going to hit 140 soon. So it has a lot of positive momentum the last week and the last month. It could have been a good time to run some call options on them, but in my opinion, the time has came and went, and you don't want to go chasing after a call option now because it's basically at an all-time high. I think that this one can easily go back down to $130 per share, or even $125 is mainly what I'm looking at to buy into Apple. Now, I already have 10 shares, 1,400, and I actually probably have 25 shares total to 30 to 40 shares through all my accounts. I really have to actually add that up because I have been buying and selling Apple a lot. We're up 14% at an average cost of 121. That's basically where I'm looking to buy in. You can also see that I have a reoccurring investment into Apple, $5 per day no matter what, which is a great investment for the long term, in my opinion. Now, you can also see some of the stats here, 52-week high, 52-week low. Right now, it's very close to the 52-week high. So, of course, I'm not going to be buying heavy at that price, waiting for a dip and a pullback that I think is extremely likely to happen. Now, a big thing I want you guys to focus on and look at is the market cap, because we're going to compare the market cap of all three of these companies, and you can kind of see if one's bringing in more revenue or more net profit, which we'll look into later in the video. And that can be justified by the market cap. So they all go hand in hand. And I'm pretty sure that Apple's the only one that actually pays a dividend. It's a very small one. It's only 0.61. But that's more than most savings accounts pay on interest. And honestly, I'd rather put my money into Apple than something like a savings account, you know. So PE ratio is 30, which is very good in the stock market we're in for Apple. Market cap 2.3 trillion. Amazon we see is up to 34.99. It's going to be 3,500 in just a couple of minutes here. It should be hit by the end of the day. It'll be interesting to see if it can break past that previous resistance that it set at 3,500. I have a feeling that a lot of people are going to want to take profits on Amazon, especially if they got it at 31. You know, it's a 10% gain on something like an Amazon. Personally, I have $1,700, almost a half of a share at an average cost of $3,100, but I'm not going to be selling anytime soon. You can see that I have a reoccurring investment, also $10 per day on Amazon, a little bit more than Apple, just because I want to build the position a little bit faster. And I don't have that much money in Amazon on any of my other accounts like I do with Apple. Okay, now Amazon, I think it will go down to 29 to 3,100 again, just a matter of time. And if you were patient, as we scroll down, we can see the market cap is 1.7 trillion, and this is probably a 2.3 to 2.5 trillion dollar company, honestly. PE ratio is 65, so it's double of Apple, implying that Apple is a better deal off the PE ratio alone. The average volume, as you can see, a lot more people are trading something like Apple because it's a lot more affordable. A lot of people are scared by that $3,500 price point for Amazon. You can see the 52-week low is 2,800 to 3,500. So it doesn't move that much. It's only like a 10 to 15% gain in the last 52 weeks. So you can treat this one almost more like a savings account. And that's why I have more money going to that daily buy. Obviously, I want to buy closer to 3,100 or 2,900. That's when I'm going to probably be putting like $1,000 or $1,500 in at a time. But you guys know me, I love dollar cost averaging in to some of these big companies like Amazon, Apple, Facebook, because I'm a long-term holder and I want to hold these ones like Apple and Amazon and Facebook for the next 5 years to 10 years. I think they will be worth a lot more. Now let's talk about Facebook. This was my biggest position for a long time, but recently I've taken a lot of profits on Facebook. It has a lot of upward momentum, just like all the other ones we've been talking about. I was telling you guys, if you've been a subscriber for the channel for a while, buy at $260 a share. I don't know why you guys weren't. You know, that was just in March 3rd. It was 250, 260. And in September, it was even 250. So you had a lot of chances to buy at that price. I had an average cost of 200. We're up 75% total. But as you can see, I've been taking profits for an extremely long time here with Facebook. And we've taken over $3,000 in profits with something like a Facebook. They've been consistently beating their EPS, by the way. And if you actually look at their market cap, they're only a $1 trillion market cap with a 30 PE ratio. Okay, so this is why I was so bullish on them before, because at the time when they were $250 per share, which they were for a long time, and I was swallowing all their shares up at that point and buying as much as I could of Facebook, they were one of the best deals in the whole stock market, and everyone was looking past them. So the volume is still a little bit higher on something like this. There's no dividend yield. And they're still a very good deal if you plan on holding for a long time, for 5 years. In my opinion, this one can go to $300 to $280 again. Though I remember those were some hard resistances in the past, right at that $280 to $300 mark on Facebook. So I think that will become the new support, and we can see Facebook drop that low again. Okay, so now we have Apple's income statement and balance sheet pull-ups. Remember, this is Apple, and we'll look at the next ones next. So net income we'll look at first on income statement at the top here. You can see their net income hasn't grown too consistently. From 2017 to 2018 was their biggest jump, up 26%. but then they fell 9% after that. So it'll be interesting to see their net income, how it pans out this year. All right. And by the way, their net income is 57 billion, which is still a huge, huge amount. Okay, so their revenue, total revenue, has not been growing that much either. So they're not a net income monster. They're not a revenue monster. You know, they've only been growing 5% and losing some growth in their revenue consistently too. So they're not too impressive on their income statement. I would probably give it like a C. You know, their income statement would probably give it like a C, C minus, C plus, somewhere in that range. Their balance sheet, if we move down to that, you can see their assets and liabilities. So in 2020s, their assets were closer to 323 billion. Their liabilities were closer to 258 billion, which was 79% assets to liabilities. Okay, so I like to see that number. I like to see the assets typically 3 to 5 times as much as the liabilities. Remember, that's one of my big things. So Apple is not the best on their balance sheet. They're not the best on their net income statement. So overall, their financials, in my opinion, they aren't going to get like an F or a D. They're probably going to get a C plus, only because their net income is so high. Like, what other company do you know that's doing a net income of 57 billion every year and doing 274 billion every year? The only reason they're getting a C is because they haven't been growing consistently. I typically like to at least see double digits every year, which would be 10% or more, 15% every year. And I like to see those assets at least 3 times or 2 times as much as those liabilities. Okay, so now we have an Amazon pulled up. So remember, this is Amazon now. We just looked at Apple. Now we're looking at Amazon. Net income is the first thing we'll look at again at the top. And you can see them growing very consistently. So from 2015 to 2016, they grew triple digits, 299%, which is amazing. 2017, they pretty much flatlined. And 2018, they grew 340%. So they are absolutely demolishing Apple in their growth, in their income growth. Now in 2019, they grew 17% again. 2020, they grew 83%. So this is a company that is consistently growing net income. They're at 21 billion, and in 2016, they were at 2 billion in their net income. So they 10x'd their net income in just 5 years, which is very astonishing, and Apple has not done that. So that kind of warrants that explosive growth that the stock has been happening for something like an Amazon. Now, if we look at total revenue, look at that. That's what I like to see, guys, when I talk about, you know, income statements, total revenue, net income. This is already looking like an A plus on their income statement. I would probably give it an A, not an A plus, because I've seen even some better growth than this. But the main reason why it's getting an A is because they're also doing 300 billion in revenue, and their net income from that is 21 billion, and they've been consistently growing every year. 27% gain, 30% gain, 30% gain again, 20% gain, 37% gain in 2020, and they are not stopped growing. If you click here, we can actually see the third quarter. They've done 100 billion just in the third quarter, so that means they would be on track for about 400 billion, okay? And in Q4 2020, they did 125 billion in one quarter, guys. This is in one quarter. So remember, for the full year 2020, they did 386 billion, which is very astonishing. So they get an A plus on their income statement. We scroll down and look at their balance sheet, and it's pretty much the same thing as Apple, not the best thing in the world. We want to see those assets a little bit higher. But when you're dealing with such a large amount of company, there's a lot of investing going on and other things. If we dive deeper and see what they're actually spending it on, well, their cash and cash equivalents is up. Their short-term investments is up 78% year over year. So that is a good thing to note. They're spending their money on short-term investments. Account receivables is up, which is good. That means more people are signing for Amazon Prime. Total current assets up 41% year over year. That's a phenomenal number. Long-term investments, look at that year over year, is up 457%. Wow. So this is just an amazing, amazing company to invest in. Let's kind of look at some of their debts though and see what's going on with that. Total liabilities up 40%, long-term debt up 22%. So it's not the worst thing in the world. Those are most of the important ones. Total liabilities up 40% is kind of huge, but something like an Amazon. So I would probably give them a C plus on their balance sheet, maybe a B minus, C plus on their balance sheet. So automatically, I'd rather invest something like an Amazon compared to something like an Apple. They're looking a lot better for the long term, especially if Amazon keeps that upward trajectory and that growth that they've had in the last 5 years. And if they can duplicate that in the next 5 years in the future, that's going to be the winning ticket for Amazon. So now we have Facebook pulled up. So remember, this is Facebook. We talked about Amazon and Apple before that. Now we have Facebook's income and balance sheet pulled up. So income statement, let's start off with that for Facebook. So you can see from 2015 to 2016, they went up 177% net income. Wow, that's amazing. In 2017, they grew 78%, 20%, and they had a little bit of a step back in 2019, but they were back on track with a 57% growth in 2020. So in that 5-year period, they basically 3x'd their revenue, which is huge for a company that was already doing 10 billion I said revenue earlier. This is net income. So, they 3x'd their net income in the last 5 years, and that's huge for a company that was already doing 10 billion in net income to do 30 billion in net income in just 5 years. So if they can replicate that again in the next 5 years, that's going to be huge for something like Facebook. Now we pull up the revenue. And by the way, I would give their net income like a A minus, maybe B plus, somewhere in that ballpark. And the total revenue is very important to look at. So look at that. From 2016, they did 27 billion, and now they're at 85 billion. So for a company just to grow like that, double digits every single year, 50%, 40%, 30%, 20% every single year consistently, if they can keep that up, this is going to be a company you're going to want to have your money in for a long, long time. So their total revenue, they get an A for total revenue. They get an A for net income. We go to their balance sheet and they knock it out of the park with an A plus on the balance sheet. And this is why Facebook, remember, was one of my biggest positions, because I love their balance sheet. I love their total revenue. I love their net income and a lot of other aspects. Their PE ratio is on point. Their market cap isn't as high as some of the other ones. They're only a $1 trillion company, so they can easily grow into a $2 trillion or $1.5 trillion market cap, which is exciting to think about. But if we look at their balance sheet, they get an A+. Look at that. It's almost 5 times as much. 5 times. They have 5 times the amount of assets as they do liabilities. So that's absolutely amazing. So if you fast forward to 2020, they're at 159 billion in assets and only 30 billion in liabilities. So if you're investing and you're looking for a place to store your money, thousands and thousands of dollars, you want a safe balance sheet. This shows that the company is going to be sustainable for a long time, because a lot of companies, they go under bankrupt because they can't pay their debts. So something like Facebook can easily pay all of its debts. If they get into turmoil, anything bad happens, they're there with cash on hand. They have so much cash. They're cash heavy. 19 billion in cash, 44 billion in short-term investments, 10 billion in account receivables, and they only have 31 billion in liabilities. So they basically have enough just cash on hand right away just to pay off all of their liabilities if they wanted to. And in 2016, they always had a good balance sheet. So they never had a bad balance sheet. In 2016, it was even better. It was almost 10 times as much assets to liabilities. So if they start going that way with their balance sheet again, that's going to be a great reason to invest into them for a long term. So I hope you guys did like those deep dive videos. I know a lot of you guys enjoy those because you learn a lot while you're listening to me and get some good ideas. Also, I'm one of the only YouTubers on the platform that actually shows all of its accounts, his year. We're up 81% last year. 24% in the last 3 months. So if you want your account to look a little bit more like mine, I show you guys a lot of my account, but I have a close friends list. I have an amazing close friends list on Instagram where I show all my buys, all my sells, when I'm buying, how much I'm buying, the reason why I'm buying, stop losses, and everything. And if you're a beginner in the stock market, this program is developed and help you understand the stock market the right way the first time through. We have over 350 positive testimonials and over 1,000 clients, students currently enrolled in the program. So check out my my Instagram right here, the Daily Stock Market. Click on success number 3, and you can go to some of the more recent ones. It might take a while to go through them. If you read through all those, I also have success number 2 that we filled up months ago, and student success, which is success number 1. So we have over 350 positive testimonials. And just some ones that I posted today. I don't know if you guys saw already, but you'll actually see up 8% in the past week. Thank you so much. You can use this in your story as it went up. I am so happy. And here's another one. We made a lot of money from options this week. Several people made $500 plus. Here's another one. Hey, Alex, so far happy with my Fidelity account. Thanks again. By the way, I think about trying options. What would be appropriate starter for me? Budget's about $300. So I also a second voice. And as you can see where the arrow is pointing, she's up 23%. All right. Now, here's another one, and this is all just from like yesterday and today, by the way. I remember I was down 30% on Fastly. I asked you for advice. You told me I shouldn't sell because you thought it can go right back up where it was again. So I just bought the dip a little, what I could afford. I'm glad I didn't sell anything at all. Hopefully this can grow and make me some dollars. So that's what I was saying. I also said, do you need like a second voice, second pair of eyes to bounce ideas off of trading? DM me for the application. So go ahead and DM me for the application. A lot of people don't have family members to turn to that they don't know about the stock market. They weren't raised in a household that talked about financial stuff. So if you need a team, like someone to bounce your ideas off of, and you don't have anyone to turn to, none of your friends are in the stock market, you don't trust their advice, that's what I'm there for, and that's what this program is developed for. All right, guys, I hope you enjoyed this video. Smash a thumbs up on this video if you did enjoy it. Share with a friend. I know that they can get some value out of this video specifically, and I will see you in the next video. Remember, don't time the market, buy the market. Peace.